What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at PayPal stock, ticker symbol PYPL, on a variety of time frames in anticipation of the next trading day, Tuesday, February 20th. Well, don't forget, guys, the market is closed on Monday, so don't show up all gung-ho ready to start trading. Nothing is going to be moving. We'll be back here on Tuesday morning, regular hours on Tuesday. So we have a long weekend here of chart analysis on the Roensch Capital Charts channel. Appreciate you guys subscribing. We recently blew away our 1,000 sub goal by Tuesday market open. So I appreciate you guys very much. It's a brand new channel, and we're growing at an accelerated rate. So thank you guys. Let's take a look here at PayPal stock, starting with the 1 minute chart. So as always, you know, this video, the primary goal of this video is to take a look at PayPal in anticipation of Tuesday, right? From more of a macro day-to-day perspective. But starting on the 1 minute chart, I think it's important. I am a scalper at heart. It's what I do every single day. So we need to look at potential intraday revenue generating opportunities through scalping or intraday swing trading that we could look to potentially replicate here come Tuesday. PayPal's a name that I'm always watching, great liquidity. So let's take a look. So the name here on Friday finished the day down 56 cents a share, 0.94% for PayPal. That's really no big deal. Many would almost call that a flat day. Intraday here, we did see a fall here pre-market, okay, which in my opinion is rather explainable. We got data right around the time it started falling pre-market on low volume, okay. The stock here Friday is down a little bit after hours. It's down, you know, maybe about 40 cents here after hours. Understand, we have to take after hours with a grain of salt. Why? That volume is very, very low. Okay, when volume is that ridiculously low, we have to take any movement with a grain of salt. Those of you who have traded after hours, you know that even on relatively large market cap names, you can move the stock with not very much size. So that's relatively concerning. You can't take the after hours movement with, you know, too much legitimacy. We have to look more toward when the volume starts coming in, and that's whether it's supporting your bias or going against you. So intraday here, from a revenue generating perspective on the 1 minute chart, PayPal was not necessarily, I would not say it was in play. Okay, what do I mean by in play? Well, as scalpers, we're always looking to, ideally, for the majority of our playbook, scalp stocks that are considered in play. Fresh news catalyst, elevated relative volume, things like that, okay? And PayPal, it's just, you know, it was more of a normal day on Friday for PayPal as far as I'm concerned. So then we're kind of stuck looking primarily for setups that have edge, even on a stock that isn't necessarily in play. For me, that's one of my backbone setups to call, it's a setup I developed. I called it the repeat offender. That one has significant edge, even on stocks that are not themselves in play. The setup itself, you know, is in play if it sets up properly on any name with enough liquidity throughout the day. Looking here, you know, this was you know, if we had gotten numerous rejections here and they cleaned up, see how these are sloppy intraday on PayPal from Friday? If we were to see numerous rejections with this channel, particularly that 20 EMA widening out, and you continue to get clean rejections with good liquidity, that would have been a beautiful repeat offender here, though. It's just too sloppy. There was nothing for me intraday on PayPal, but that just gives you an idea of what I'd be looking for if we see Tuesday be another day where PayPal isn't necessarily in play. You know, we don't get unexpected news. We don't see elevated relative volume, something like that. Okay, so let's move on from the intraday mentality and start looking at the macro day-to-day perspective, starting with volume on the 5 minute chart. What are we looking for here? Well, really, you know, every single day, what I'm looking for is volume bumps that correlate, obviously, with big changes in stock price. Why do we care? Well, if you're a bull, for example, you want on any time frame big upside moves to be on as much volume as possible, and downside fades to be on as little volume as possible. You know, the opposite is true if you're a bear. So looking here, we have the obvious moves. We have this downside move in pre-market. Volume is never going to be, you know, unless we're seeing a massive catalyst specific to the name, volume is never going to be respectable enough. So now we're stuck looking at, like, see this up move here and maybe this fade here midday. Well, did we see any big volume changes that lead us to believe that the majority of the market sample size, or a big sample size in the market, more so, is very clearly agreeing with that sentiment over the opposite. And honestly, we saw this really clean U shape in terms of volume that is so common in equities on PayPal here on the 5-minute chart from Friday. And honestly, looking at this, I'm not seeing any bearish volume that is out of the ordinary. And it was a down day, so we're also not seeing, it's slightly less likely that we would anyway, but we're also not really seeing any bullish volume that leads me to think, hey, this is very, very obvious that the bulls, the huge sample size is agreeing like with this upside move over this downside move. We can't force anything just to make ourselves feel good. So let's now get super contextual looking ahead toward Tuesday, starting with the 30-minute chart with the very obvious self-fulfilling prophecy levels of this 200 period and that 50 period. We are currently right up against that 200 period here on the 30-minute chart. So here's what I'm looking at. If I'm a bull, I want to see a huge bounce, ideally, off of that 200 period like we saw early in the morning, right off the open on Friday, and head up toward that 50 period. Ultimately, my goal, if I'm a bull, is to reclaim that 50 period moving average here on the 30-minute chart, okay? Now, if I'm bearish, I have one thing in mind here on PayPal come Tuesday, and that's going to be break downside through that 200 period as hard as possible. Okay, that's from a bearish perspective. Let's move on now to the 4-hour chart. You can see here that 50 period is very much so in play. There we go. Let's crop out that big wick so we can actually see something here. See this 50 period? Very much so in play. Listen, if I'm a bull, priority number 1 on the 4-hour chart, we're always looking at multiple time frames. It's a very lazy way to trade, just looking at a single time frame, especially from a day-to-day perspective. So number 1 priority, if we're bulls looking at this 4-hour chart, reclaim that 50 period, ideally. Okay, and if you're a bear, you want to see this 50 period continue downside as aggressively as possible and continue to see rejections if we were to see a test off of that 50 period, pulling stock downside if you're a bear. All right. Now, the most important chart of all, that is going to be the daily. Now, let's take a look here. And you can see immediately that both the 50-day, that white line, and the 200-day are above $60 a share. That 50-day is 3.25% away. That 200-day is just about 4.6% upside away. So here's what I'm looking for on the daily chart. Remember, the most obvious story is typically the most popular one, which is going to be the one you want to watch. This is all a self-fulfilling prophecy, at least that's what I believe. So priority number 1, if I'm a bull looking at this daily chart, reclaim $60. It's not only a psychological level, but also a technical level we've had drawn. All right, reclaim 60, make our way up toward a test of the 50-day, because ultimately, as a bull, the ultimate goal is to reclaim not only the 50, but also that 200. Okay, now if we're bears, one thing is very, very clear that you're looking for. Reject as hard as possible off that 60, and if we break upside through, reject off that 50. But ideally, reject off that 60, continue downside. Okay, let's take a look here at the options bias. This is all from Friday. These are how the traders are positioning themselves heading into Tuesday. We had 137,000 total contracts traded. That's a pretty good sample size. Okay, I mean, we can't look for 10 million on PayPal. 93,000 of those were calls. 43,000 of those were puts. So we are seeing a heavy call side bias here on the overall ratio. If we look at the short-term speculators, the 0 to 20 delta range, 39,000 were calls, 20,000 puts. Okay, all the way down the line, out of the money, at the money, and in the money, which is on average short-term, mid-term, and longer-term sentiment, all leaning bullish on PayPal here on Friday, including that overall ratio. Listen, keep in mind, of course, manage your risk. That's always priority number 1. The options traders, they can, of course, be wrong. Listen, again, if you got value out of that video, please subscribe to the channel. I greatly appreciate it, and I'll see you in the next one.